And hello, everyone, and thank you for your patience while I was trying to get the YouTube live stream on. Let me make sure that its volume is off. Thank you for joining us in this beautiful day. I hope everyone is safe and healthy, and perhaps even your kids are watching as well, and they will have a very educational 30 minutes with us today. I'm Nama Blonder. I'm an architect and urban planner with Smart Density. My co-host and dear friend is Lirat Kligman, a co-founder of the Yorkville Team's residential and commercial sales team in Toronto. For those of you who've never been here before, we have one-on-one or two-on-one conversations with Toronto's leaders and innovators of the real estate industry, and a chance to get to ask them questions that usually we never got a chance to ask those questions, right? Like in school or when you start in the industry. So Lirat, please introduce our guest today.
Yes, so it's my pleasure to welcome Sasha Cucuz, CEO of Greybrook Securities and partner at Greybrook Capital. Just going to give a short bio. So as the CEO of Greybrook Securities, Sasha is responsible for the firm's operation and investment strategy. Together with his partners, Sasha has played a significant role in growing Greybrook's real estate investment portfolio to include over 80 multifamily and residential development projects throughout North America, which represents over 17 billion worth of estimated completion value, including over 23,000 residential units currently in development in Ontario. Sasha works with large-scale developers such as Tribute Communities, Fieldgate Homes, Empire Communities, and others. And Sasha also serves as the co-chair of Greybrook's investment and project advisory committees, where he's part of the team responsible for approving new acquisitions and overseeing existing limited partnerships. So Sasha, thank you very much for joining us today. And I'm sure I left out a whole bunch of really noteworthy experience, but why don't you just give us an overview of where you came from and how your career path has evolved into where you are today?
Sure. Thank you. First of all, thank you for having me, Nama and Lorad. That's always the awkward part when you're listening to somebody describe your bio that, incidentally I didn't write, but all generally accurate. I think obviously our company, it's a 16-year-old business. I started it back in 2004, the tail end of 2004 with my partners, Elias Bambakis and Peter Politis. At the time, I had sort of limited experience in finance and certainly none in real estate. So in retrospect, and I'll kind of describe that pathway so that people kind of understand how we got here. But I had spent a couple of years playing hockey professionally in the US after school, and when I finished playing, not by choice. It's always funny, when you're playing sports at that kind of level. Usually the decision is made for you. You'd love to play forever. But sometimes the natural selection of athletes makes it such that you got to hang them up. And that was kind of the case for me after a few seasons. I kind of decided that, it was time to get into the real world. Didn't really know what that meant for me personally. And when I had stopped playing, our Players Association had sort of what they called a career transition program to kind of help people decide what it is that they wanted to do. My education was in economics and business. I had gone to York University and graduated from York. And I contacted sort of this little program within our Players Association. And the first thing they wanted to do was, run me through sort of a character assessment and, a bunch of these things like the Myers-Briggs and stuff like that. And I was more interested in meeting people. So when I sat down with them, I said, I'm happy to do all this, but really, I think I have an interest in sort of finance and economics and things like that. So, the gentleman there said, okay, great. Why don't I make some introductions? I'll introduce you to some people that I know on Bay Street, and you can go ahead and see where that takes you. So I did. I took him up on that offer. I met a number of great people, and I got my first job at TD Securities on the global Eurobond side. So nothing to do with real estate. And I had spent some time at TD, and sort of prior to starting Greybrook, my path, or the way I thought sort of my path would evolve, was more in sort of the corporate finance and what I'll call traditional asset classes, stocks and bonds. That's kind of what I felt my career path was. And I had met Elias, who's now my partner, in sort of a different type of setting. He was working on something. He had just taken a healthcare company public. The company was called TLC Vision. TLC Vision at the time was the largest provider of LASIK in North America, and he was the chairman, CEO, and founder. And after taking that business public, you know, he was still the chairman and CEO, and had taken some of the capital, you know, the wealth he had created through that process, and started to invest it in different things on his own. And when we met, my other partner, Peter, had just joined him. Peter had just graduated school from U of T. And Elias said, hey, instead of going into investment banking or kind of following that pathway, why don't you come work for me? I have a little private equity firm, that he called it, which consisted of like really nothing but sort of a legal entity that had some capital in it and some investments he had made. And Peter kind of took him up on that. And when I met him shortly after, he said, you know, you can stay at the bank and you can do that kind of thing, but this is kind of a fun opportunity. And if you do well, you know, we can talk about how we can all be successful together in a partnership. And why don't you come and join us? So I did. And Peter had kind of preceded me by about 4 or 5 months, maybe 6 months prior. And really at the time, it was Peter, myself, and sort of not a lot of you know, resources and sort of strategy. But Elias was very supportive, and there were some other people that Elias was working with at the time that were very supportive of what we were trying to accomplish. And at the time, it was a much more broad strategy. It wasn't really real estate oriented. You know, Elias, being an entrepreneur, had sort of invested in a number of different things, from transportation companies to sort of technology, healthcare being his background. And then he had made an investment into a real estate deal as well. And kind of, you know, to keep a long story shorter, it's probably already long at this point. As we began to learn more, Peter and I, as we began to sink our teeth into the things that we had invested in and where we wanted to take our strategy directionally, we really realized we had an affinity to the real estate side. Just, you know, the hard asset nature of it, and development specifically for us gave us what we felt was a great risk reward relationship, where you could have the ability to generate, you know, private equity like returns, really buying land and going through a manufacturing process, as we call it, rather than, you know, buying into operating businesses and their complexities. So over the course of time, we shifted our strategy from a very broad-based, you know, approach to investment into an extremely narrow strategy that focused on residential real estate, particularly in development. And obviously it worked out, and it was a great thing for us as an organization. And then since then, you know, we took this very narrow thing and turned it into a diversified platform within this narrow focus, right? So it's all residential real estate primarily. You know, there's some commercial components to it, but generally residential real estate development. But then adding in, you know, diversification through the course of time with different partnerships, different types of residential real estate. We do everything today from master plan communities that have 1,000+ homes right through to condominiums. We own workforce housing in Canada and the US. We have a multifamily platform that we share with a partner, PMG, in the United States, where we build sort of Class A residential apartments. And obviously our strategy here in Southern Ontario has been, you know, quite a bit of our focus, where today I'd say we have probably over 23,000 units just in Ontario under development and construction. So that's kind of a little bit of the history and how we got to this point today. Just as a quick overview for the listeners, you know, today our firm consists of about 70 or so professionals. We're kind of divided up into two categories. One is capital markets, where our team works with our investors. We have over 7,000 private high net worth and institutional investors in over 32 countries around the world. We manage about $1.2 billion worth of equity, which is about $17 billion worth of development. And then we have the other half of our house is asset management, where our team is responsible for the active management of our projects. So our role is not only to sort of capitalize these vehicles and underwrite them, but it's to really, really get deep and deeply involved with our partners in the execution to make sure that the projects are going the way that we want them to go on behalf of our investors and our other stakeholders. And that team is really responsible for that aspect. So that's kind of a little bit of a snapshot as to who we look like and who we are today.
That's wonderful. Thanks for that overview. It's really impressive in a relatively short period of time that you've managed to have this extraordinary growth. So hoping you could speak a little bit about how do you manage such rapid growth, growing from a small team, a small firm, as you mentioned, to a company of over 70 professionals.
Yeah, so, well, look, if there was a secret sauce, I don't know that I have it. I think that there's different ways to do it. And I can sort of, if I could kind of think of the common denominator or the most important ingredient for us, really has been, three things, I'd say. So one of them is focus. One thing I learned kind of from the early days of our organization is we had a very broad focus, right? We were a little bit of a jack of all trades, right? We were trying to invest in private equity and different industries as well as in real estate. And, it wasn't really until 2009 that I think we really, really decided to narrow our focus and become experts in the area that we wanted to grow. And I think doing that was really critical, because it's not to say that you can't become successful in doing many different things. We just felt that, becoming the best at one thing was kind of our pathway. So that was kind of the first thing. The second thing, and I think this is probably the most critical of all, is, hiring good people. I think as an entrepreneur, and sort of the type A personalities that Peter, Elias, and I are, it can be very easy to want to control everything and sort of do everything yourself. Like I joke around this, I joke about this sometimes with my wife and say, you have this innate feeling that you can just do things better than other people, whether you're right or wrong. Like, you're probably wrong most of the time, but like, that's just sort of wired, and I think it's, as you grow an organization, you realize that you can't do everything, and that you need to bring in people with incredible competency and diversity that can help you broaden your perspective. And I think, to that point, it was very important for us to grow our organization. We made some very key hires in the early years that I think really, really helped us get to the next level. And without the people that we brought on, and subsequent to that, as we built our organization, we'd still be three guys in a room. So I think you need to understand that as an entrepreneur, that growth is a collection of minds and not sort of any one person. And I think a little bit to that, I feel fortunate that I had partners. Sometimes as a CEO, it's a lonely place because you're making decisions, obviously with people around you, but the buck stops with you, and you sort of have to live and die by your decisions. And I'd say that while it's true in some sense in my day-to-day today, I feel fortunate to have partners that kind of share the same responsibility and the same sort of, we wear the outcome, good or bad. And the amount of hours I spend with let's say Peter, who he and I are the most active on the real estate side. Elias is more on the healthcare side of our strategy. We spend 1,000 hours, it seems, a month just debating things. And if somebody's listening, if there was a little bird listening in a room, they'd probably think we accomplished nothing, because sometimes we don't even make a decision. But like, just that iteration and different angles all the time, to be able to bounce that off somebody all the time, I think is really, really important. So people would be number two. And then the third thing that we've tried to maintain, and it's become a little bit harder as we've grown, is just a very open and flexible environment in the sense of ideas, right? I'd say, flexibility might seem contrary to the first thing I said, which is narrow and focused, but it's very possible, and in fact, I think critical to be flexible within a focus. And you know, I think a lot of times you can get very set in your way and your strategy and the way that you do things, and that might be great, but I think you plateau as an organization. And I think that if you're going to have component number 2, which is smart people, you also have to be open to listening to smart people and helping them build with you and providing the right incentives. You know, I think as an organization, we've been very cognizant of that in making sure that people have the right financial incentives, obviously, but beyond that, you know, career type incentives. You know, people are fulfilled not only by the amount of money they make, but how meaningful and impactful their contributions are. And I think here we really try and bring that out, you know, as much as we can. So those would be kind of my 3 ingredients, and you know, the caveat being that my 3 ingredients are different than yours, Nama, and different than yours, Lurad. Like, I think, you know, there's no one path to success. And I always joke a little bit about this when, you know, I watch TV shows like The Dragon's Den, because it makes me laugh when an entrepreneur kind of comes up there and then you have 5 people that, you know, tear them a new, you know what, about the idea or the plan or the valuation. And the fact of the matter is, each one of those entrepreneurs, whether they're successful in their own right, they all are, and that's fantastic. It doesn't make them an expert in everything, and it doesn't, you know, necessarily make them right about any particular idea or any particular person's capability, right? So I think that's sort of, you know, an important philosophy we have here is just understanding that we've done it a certain way. It doesn't make it better or worse than somebody else's perspective.
I totally agree with everything you said about people and partnership. And yes, we don't run the same business, but it's absolutely true. And I can attest for sure. You have, first of all, you're the first speaker in this series. I believe this is episode number 20. And you're the first speaker who's coming from, you know, private equity. And in that sense, your business is unique because your clients are investors. Can you speak about that? What do you think your, you know, the strategy is different, competition is different? What are you trying to convince when this is what you do? And I'll top it up with one more question. When you say about the real estate and the healthcare, and there's always this question in business: should I focus and I'll be the best in this thing and I will, you know, dominate the market, or I'll be so good at it, versus let's be safer, perhaps make sure that we have two strategy in the same company? And this is kind of a sub question to the first question. Sorry if that
sure.
was a long question.
That's clear. You know, I think with regard to the second part of your question, which is regarding kind of diversifying strategy versus, you know, putting everything you have into one strategy. I think there's an element of importance to both. I mean, I think the way we did it here is a little bit, if I could recommend it, probably the best way, where we started off very broad, and we tried to, you know, because unless you start off broad, it's hard to find where the opportunities are, right? Like, what are you good at? Where can you build competency and sort of, you know, how can you even pursue the success that you're trying to find for your investors? I think that's kind of first and foremost. So we started off broad, but then after feeling it out a little bit and seeing where we had more expertise and where we thought there was more potential in the market, we went very narrow. And what we tried to do was build a very core capability in doing it. And I think to manage growth, that narrow focus was really important for us. Like, again, it might not be the only way, but for us, it was really the right decision. So for a number of years, we kind of parked our other strategies and just put our head down and focused on the one that we thought was the most potential. And then only over time, when we felt that we had established a, it's interesting sometimes the way we talk about it is like, there were times in the early years where you're making investments and any one poor outcome and you're out of business. Like, you're just not stable yet, right? You haven't developed your standing in the marketplace. You haven't, achieved sort of a level of consequence and scale that you can survive if something happened that was not a positive outcome in, let's say, a project or whatever. And then it was only when our organization, we felt like, look, we want every outcome to be amazing. But the reality is, and this is why when we work with our clients, we ask them to diversify themselves, right? So even within our real estate strategy, if Nama, if you came to me and said, I have $100,000 to invest and I really love this project you're doing in Yorkville, the first thing that one of our capital markets people would try to do is try to help you understand that, putting $100,000 into this one deal, as great as you think it is, probably isn't your best strategy. And you should take that $100,000 and divide it in four and put it into 4 different deals, one high rise, one low rise, maybe some geographic exposure and diversification. So the idea here is to be able to, focus when we need it to focus, but then pick your head up when you think that you've sort of hit this critical mass, and then look at how do we get to the next level and how do we protect what we built. So to your point around diversification, I think it was very important for us once we felt we got to a point where we could pick our heads up and think about how to make our business better. Part of making it better was to make it more resilient. And part of making it more resilient was to think about other strategies. And for us, healthcare is a natural one because one of our partners and co-founder, that's his expertise. So we've always kind of had a foot into healthcare. So it made a lot of sense. But at the same time, diversifying even within our own narrow strategy and starting to go from, in the early days, we were doing a lot of condo equity deals, and condo became condo plus townhouses, and then master plan communities, and then multifamily, and like it just kept diversifying, and then geographic diversification. So diversification, as you point out, is a critical thing for any organization, and I don't think it's one at the expense of the other. I think focus is important to kind of get off the ground. If you think of it like a flight, you got to really focus on the takeoff, and when you get to an altitude where you feel okay, I can sort of go to the bathroom and I'm on autopilot a little bit. Now, how do we get there quickest and best? If that, I don't know if that analogy made any sense, but that's kind of how we thought about it. First part of your question, you're gonna have to remind me what it was because I just went on talking.
The first part of the question was how your business is, different when your clientele is basically investors. Okay, and I do have another question, so please, I'll let you answer that.
Yeah, I mean, I think for us, there's 2 things. So when we first started, today with 7,000 sort of investors, and I'd say 20% of our capital is institutional and 80% is private high net worth. The question I get asked a lot is, wouldn't it be easy to just go work with 2 or 3 pension funds that can do all your deals instead of having, 6,000 individuals? The answer is, it depends. It depends on your vantage point. I think for us, when we first started, without a lot of experience and a lot of track record, it was difficult for us to go out and secure institutional investment because of the way that, generally institutions look at sort of managers and their history and breadth. It's a lot easier to do that today. But when we first started, it was very much a friends and family type approach, right? We had some of our own capital, obviously through Elias, and then beyond that, we had our own networks and our own friends and family, and that's how it started, and then just became sort of expanded through there. And the infrastructure we built out was very much to deal with individual investors and their portfolios. So, we kind of took a very deliberate approach to that. So as we stand here today, it doesn't make a lot of sense for us to change that mix. Like, this is the business we built. This is the infrastructure we built. We're very well equipped to be able to deal with private clients on a very deep sort of basis, help them build portfolios, help them, get exposure to this asset class. So there's been many times where we do a deal that might be a $50 million equity deal, and we have a single investor that wants to take the whole 50 million, and we decline and simply do it the way that we normally do it and diversify our clients, and we might have 400 or 500 investors in that LP. So that's the business that we built. How is it different? I think, and it's hard to describe this without, obviously everybody, if you're a pension fund manager managing pension fund assets, you care about your returns and you care about your process. And so this isn't meant to sound, derogatory in any way, but when you know who your clients are as individuals and people, it is a little bit of a different responsibility, or at least you feel it's a little bit of a different responsibility. Like, managing the Canada pension plan, where theoretically you have a nickel from every Canadian, walking around Canada, they don't have the same identity. Not to say that you don't take your job as seriously, or, obviously you do. They're one of the best investors on the planet. But it's different when, like, I meet my investors and see them and know who they are and know what their families are like and their children. Like, it's just a different level of responsibility. So does that make us any more diligent? I don't think so, but it does sort of always, it's always in the back of your mind, right? Like, you want to be successful, not just for your firm and the people that work here, but ultimately the people whose capital you're managing, because they're the ones who have entrusted you to do it. And, I think we've learned over time. I'd love for portfolio management and project management to be everything's great and every investment's going to be perfectly executed, but that's just not reality, right? So I think what we've had to learn to do over time, as markets change, as circumstances change, like nobody predicted, in 2018 that B20 would come in and have such a profound impact on the market. Well, if you bought a whole bunch of things in 2017, you might have had the right business plan, but all of a sudden you had to change that business plan and make a lot of adjustments to your strategy. Nobody predicted a global pandemic in 2020 and what impact that would have on the market, both good and bad, frankly. So look, like, you just learn that you have to deal with these things, and you have to build the best possible team and have the most flexibility within your structure to be able to change and adapt and do your best. And I think one thing our organization is really working toward is, making sure that all of our investors are coming into this with the right expectations. We want to make sure that we're transparent with them throughout the whole process, through reporting and auditing our financial statements and everything like that. And that our team, comes to work every day and does everything humanly possible to try to make outcomes as great as we can make them. And there's only so much you can do, but we do it. Like, we leave everything on the field, to use another sports analogy. So at the end of the day, whatever an outcome, and obviously we hope that they're all fantastic, nobody's going to be able to look at us and say you didn't do enough, or you didn't do, what you were supposed to do. I think that's the most important thing for us.
Sasha, I'm looking at the list of attendees, and to be honest, I don't know even half of them, but from the half that I do recognize their names, they're mostly, younger developers. What advice could what would you like to say to developers who are your colleagues, or what advice can you address specifically to our audience?
Yeah, I think, so, there'd probably be a lot of different things, depending on, each individual that I'm speaking to, depending on what their own objectives are, what they're trying to accomplish. But I think if I were to look at things on a sort of broad, uniform basis within development, I'd sit there and say to them that, the GTA and the Greater Golden Horseshoe, let's call it Southern Ontario, has very, very good fundamentals. And that's something that from day one we have made very clear. We do a lot of development now in the US, and we have clients, like I said, from everywhere in the world. And they say to us, like, well, you guys invest in Toronto, your head office is in Toronto. And I say to them, look, our whole healthcare business, we don't have a single investment in Canada. Every company we've invested in is in the US. So it's not that we're afraid to expand geographically. It's that if I'm a developer today anywhere on this planet, Southern Ontario is as good a place as you're going to find, because it has both the scarcity factors, right? I mean, I don't have to tell you guys, especially you, Nama, around some of the constraints related to planning and ability to kind of get the right type of inventory to the market, but also, a ton of demand. And notwithstanding, this year has been a bit of an anomaly, obviously. We do have consistent demand for the right reasons. So the fundamentals are obviously very strong. So I tell people to kind of stick, be grateful that we're in this market, because we have a fantastic market. And I don't mean the market in terms of like whether it's good or bad from people buying and price. I'm not even talking about that. I'm talking about the fundamentals that underpin our market over the long term will prevail. So we can go through periods of time, whether it was 2 years ago on the low rise side with B20 and other constraints, or whether it was this year with the pandemic and what it's done to kind of downtown core rental product. It will all pass, because the underpinnings of our market are probably the best on the planet. And I don't confine that just to Toronto. I think of it as sort of Southern Ontario for different reasons. So that's the one thing. The second thing that I would say is that the word partner means many different things, all of which are important in development, probably more so than any other industry, at least from my vantage point. So one of our taglines is exceptional partners, exceptional returns. And the way we think of it is we have exceptional partners in the form of our development partners and our execution. We have exceptional partners in the form of our investors who have trusted us to manage their investments. But if I'm a developer today, young developer, you should think about that word, because it goes beyond just that. If you think about the development process, it has to be collaborative in every possible way. Like in planning, if you're not willing to take a amenable approach and a partnership approach with other stakeholders, the community, the city and planning groups, other special interest groups, you're just not going to be able to move things forward, right? So you have to take a very partnership-oriented approach. Once you get into the sales component of your project, once you've got through planning, you're partnering with the brokerage community and helping find the right customers for your project, whether it's a more investor-driven project. And investor is it's become through the media such a bad word for some reason. Like, you don't want to have investors, because people have equated investor to speculator, and that's just not correct. Like, there's a lot of investors who are looking for sort of long-term capital appreciation, stable cash flow, and frankly, those investors have made up the vast majority of our rental pool to date, right? So I think it's a very important and necessary type of customer, and it's not a bad thing, right? Is it a bad thing when somebody buys things to flip out of them and assign them 5 times? Probably yes. But that's like not by any stretch of the imagination the majority of the investor base. And I can tell you this because we build a lot of condos, we sell a lot of condos, and we know who these people are, and we're getting a lot of good solid investors that are there. So whether you're targeting investors or end users, you have to partner with the brokerage community and make sure that you're getting your value proposition across, and that they understand it, so they can bring you the right type of customers for what your objectives are. And then in construction, it's like another level of partnership, right? With from your GCs through to your trades and your consultants and everybody. It's just a very collaborative approach. So the word partnership in development takes on many meanings, but unlike maybe sometimes in operating companies, it's kind of everywhere, and it's very pervasive. So I'd say that would be my advice, like to be happy and sort of grateful that we're in probably the best development market that I know of, and also taking a partnership approach to your projects.
That's great. That's fantastic advice, Sasha. Thanks. So just to be cognizant of everyone's time, we want to wrap up with one more question. So is there a book or particular mentor in your life that's had a profound impact on you that you'd like to share?
Well, books wise, I'm not a big book guy, surprisingly. I read a lot of news. I spend a lot of time reading things. Part of my job here is sort of understanding macroeconomics, and it helps inform our investment strategy. So I do a lot of that. In terms of mentorship, so I don't have a book particularly that sticks out in my mind, unless you want to read the last 30 issues of The Economist, if you could call that a book. I read that. But I think from a mentorship perspective, for me, it's been a collection of people. I can say that I've had the good fortune of, through my partners, for example, Elias is 20 years older than Peter and I. He's been a great mentor for me personally, and I think for Peter too. Hopefully Peter doesn't watch this video, because he and I can never admit to one another that we respect one another to that degree. We have a great relationship, but it's we always debate. But even Peter, like who's sort of my contemporary, like just certain aspects of how he conducts himself and the things he's done have been great for me to learn from. And hopefully he'd say this. He probably wouldn't say the same, even though I think he probably knows it. But I think having two partners whom have been such an important influence on my life and career professionally, they've both been tremendous mentors to me in their own right, and I think I'm very fortunate to have that type of relationship with my partners. And I would say outside of that, there were some early development partners that we worked with that I think did a great job in helping us understand this business. People that come to mind are Anthony Heller from Plaza Corp. Like, we spent a lot of time with Plaza Corp early in our careers, and we learned a lot from how Anthony conducted himself through development, and what he looked for, the fundamentals that mattered, and how he went through the process were kind of fundamental building blocks from my perspective. Al Libfeld at Tribute, Gary Goldman at Stafford, some of our earliest partners, all in their own right, were very influential in sort of how we built our own perspective and our own approach to development. So unfortunately, I don't have any single person I can point to, or any one book I can point to, but it's been an amalgamation of a number of different people that have had a profound impact on us here at Greybrook, and sort of how we see the world.
That's fantastic. Thank you. Well, I just want to wrap it up, and Sasha, offer you our huge thank you and appreciation for sharing all of your insights and taking the time to speak about your experiences with our community. I'm sure I speak on behalf of everyone when I say that was fantastic. So thank you once again. And I want to let everyone know about our exciting next guest. So if you've seen, we've leaked a little bit of information on social media, but we are happy to welcome Jan Gehl, the renowned, I would argue, icon of urban planning from Copenhagen. So we welcome him on Tuesday, February 9th at 11 a.m. for our next episode. And thank you, everyone, for joining us. We look forward to welcoming you again. Thanks a lot, Sasha.